Here's Ken Calhoun live with the latest trading strategies for today's markets.
Hi traders, in this episode of Trading Television, you'll see another one of my all-time favorite strategies updated for the current markets. I think you'll be excited once you see how it works.
These are not trade recommendations, although I will be highlighting specific stocks that I am personally trading, as well as breakout triggers that I'm using. These are not to be construed as trade recommendations, and by participating in this event, you hereby agree not to make any actual trades based on what's being presented here tonight, because all information is for educational use only. No profitability claims are being made for how you could do or potentially do, because trading involves high risks. Typical customer results are that all traders will incur trading losses, and most do not become profitable because trading is a speculative, risky, dangerous thing to do. So proceed with caution.
Hello active traders, this is Ken Calhoun, president of DayTradingUniversity.com, with an example of how I'm profiting from a long position in a triple short financial bear ETF on bad news. What I am trading though profitably is the short ETFs, for example FAZ. When that news hit the wire, bang, the short ETFs, and again for those not so familiar with our our leveraged ETFs, the FAZ is the daily financial bear. It's the finance triple short. So when bad news hits the street on economic, finance, banking news, this thing goes up. Now, that news has been, up until today, relatively rosy, meaning the bear ETF has been selling off, right? Now, this is a 55-day chart. It went from 23 to 11. But the reason that I traded it long was because we have high volume reversal here. This is the highest volume on 55-day chart. What's my exit target on this? Well, for a day trade, it might be if it drops back to 1207 or something, right? But for a swing trade, and I think I'm going to let this one ride into the close as I'm recording this live here today. It is 3:20 p.m. Eastern, so it's about 40 minutes before the market closes, and I'm in just a couple hundred shares. I will be buying into this on strength if it keeps going up. I like the SKF. I'm also long and right, making some money on that. And again, normally I would go ahead and just take these and close out these positions, but because this is major news in this ETF, or impacting this ETF in that entire sector, I'm going to let it ride. I'm going to hold that overnight. My trailing stop, unless of course the trailing stop gets hit before the close, my trailing stop on this, hard stop I should say, is 11.75, which is just a few pennies over what I paid for it. So I'm going to give it 35 cents worth of play, just a couple hundred shares, and it's up almost half a stick for me here, from 11.7 to 12.10. I got 200 long in SKF. I'm going to scale into this on new breakouts over resistance if this goes up. Now you can see, for example, FAZ, I've got buy triggers, a couple hundred shares at 12.88, 13.28, 13.78, depending on the day. You know, if our market continues to sell off like it did today, this is the NASDAQ Composite 2-day chart. And you can see it's making my favorite pattern for shorts, which is the rollover bear cup consolidation. The bear cup handle 2-day low breakdown. Bang, that's the play. I always play 2-day high lows. By the way, if you guys are watching the pre-market futures today, this is what happened between 8 and 9:30 right before the bell. So we knew the market was going to go down. And hopefully you've got all my other educational material so you know how to trade using those kind of signals. But I've got my real money on the line in these, and I'm making some money, which is always a good way to close out the week here on a Friday afternoon. What's my exit target on this? Typically, for swing trades, I expect no better than 50% of the range that it had sold off. So if I did catch a bounce in this, and if it does keep going up, and it might not, it might keep on going down. If it does, that's what my stop's for, which, as you'll note, is set where? Right over break even. I paid $11.71 on average for 200 shares long the FAZ. I'm up $81 in profit, and $79.77 in profit in this. And I'm putting the trailing stop at $11.75, just about 3 cents over for what I paid for it. So even if it sells off into the close, that's okay, and takes out my stop. I'm risking this money in pursuit. I could sell it right now, but I'm not going to, because I'm a good trader, and I think that this thing has much more upside to go. Anyway, my point being is for an exit target, let me scroll this back in here for you. The exit target, no more than 50%, which is around 17 or so on this 55-day chart. So I'll be thrilled if I can scale into this thing and trail close stops as it works its way from its current inside market here to around 1207 on the inside bid. If it can go from just over the 12 up into the 13, 14, 15, 16 in the days to come. This may be the start of a pivot, and that would be great. And I'll ride it up here, and I will scale into this thing. Then I'm happy to walk away a winner if it starts to reach somewhere near 17. Now, if it doesn't, if it starts to sell off, my trailing stop is right here at 1175. So I'm bulletproof, right? And that's how you trade. That's how a trader trades a market. Remember, market sells off. I am trading the short ETFs, kind of like a double negative, kind of makes your head hurt at first. But yeah, by trading the short ETFs, you're able to capitalize on market downturns. So let's say if our NASComp, let me pull this up, the last tip here. Our NASDAQ composite, the 2500 was the top, and this thing starts to sell on off down here, between 2450. 2450 is in a line in the sand. So if it loses the 2450, I'll be scaling up aggressively into the short ETFs. Again, this is not a trade recommendation. This is just what I'm doing in my own trades. Anyway, if it sells off from 2450, that will be where I'm going to be leveraging up into some of these short ETFs. And it's a great way to play the market when it sells off without actually shorting stocks. And that's also particularly appealing if you don't have a $25,000 plus PDT eligible account, a pattern day trading rule Reg T account. You can swing trade a small account, $2,000, $5,000 account, whatever, by buying some of the short ETFs, which go up when the market goes down. So it's a really good way to capitalize on market sell-offs without having to have a marginable short account. Even though for those of us who are day traders, of course we do, but for those who aren't, for swing traders, take a look at some of these bear ETFs, and they go up, and in my case I'm making some money with this as the broad market sells off. That's how to trade. And anyway, I hope this has been helpful. And again, only pay attention to educational resources that are backed with an actual streaming live real screen cap of real trades from a real trader. That really counts. Most of these people in the industry don't really trade. Proceed with caution. Make sure to demand authenticity, right? Is that person even a real trader? Can they trade profitably, which I do? Are they somebody who's worth learning from? And I hope that these have been some good tips. This is how I'm making some money today. Great way to close out a Friday. Y'all have a great weekend. Ken Calhoun, Day Trading University. .com signing off for the day after tax day, April 16th, 2010. Make it a good one, and best wishes for success in your trading.